In this video, you'll learn what operating profit is, why operating profit is important, how to calculate it, and what I look for when I'm investing in companies. You'll also learn about an important ratio we can calculate from operating profit: operating margin. Operating profit. If you are a stock investor, you need to know what it is. Don't believe me? Just listen to these guys. Peter Lynch. You need to find companies that are able to grow their operating profits consistently over the years. This growth is often a sign of strong management and a competitive advantage in the marketplace. Charlie Munger. The wise investor sees businesses that generate substantial and consistent operating profits as safer and more predictable investments. Operating profit is the lifeblood of a company's financial health. Okay, so operating profit is important, but what is it? Operating profit tells you how much profit the business generates. It's also called EBIT, which stands for earnings before interest and tax. Why? Because it's your profit before you take into account interest and tax. Why is that important? By not including interest and tax, you can see how much profit the actual business generates. Interest doesn't have anything to do with the core business. The amount of interest you pay depends on your debt, and tax is something largely out of your control. So if you want to know how profitable the business operations are, then operating profit is your number. How do we calculate operating profit? It's simple. We simply take gross profit and subtract our operating expenses. Not sure what they are? Here's 2 previous videos I made on gross profit and operating expenses. Let's look at an example. I run an orange juice stand. Last month, I sold 100 cups of orange juice for $3 a cup. That means my revenue was $300. It cost me 50 cents to make each cup, so my cost of goods sold was $150. Cost of goods sold are the costs directly related to making the goods I sell. Subtract cost of goods sold from the revenue and we get my gross profit, which was $150. My operating expenses were $50. Operating expenses are costs not directly related to making the goods I sell. To calculate my operating profit, I subtract my operating expenses from my gross profit. 150 minus 50 equals $100. My operating profit was $100. That's great, but as an investor, it doesn't tell me much. What I'm more interested in is how operating profit is changing over time. An indicator that you're looking at a good business is that operating profit grows over time. Just look at the operating profits of Microsoft. See how the operating profit goes to the right and up? You may be wrong, but you can probably guess which direction operating profit will head in the next 5 years. Now compare it to a company like Under Armour. Can you tell me if operating profit will be up or down in the next 5 years? Looking at the change in operating profit over time can tell you a lot about a company. We can also calculate a powerful ratio from operating profit, and that's operating margin. Operating margin tells me how much revenue flows through to become operating profit. To calculate my operating margin, I simply divide my operating profit by my revenue. My operating profit was $100. My revenue was $300. 150 divided by 300 equals 0.5, or 50%. That means for every dollar of revenue I earn, 50% becomes operating profit. The higher the operating profit, the better. When I'm looking for companies to invest in, I look for high operating margins. But what I really want to see is consistency of operating margin. Just look at the operating margins of Visa, MasterCard, and Adobe. What I don't want to see is operating margins that are all over the place, such as Boeing, Shopify, and Qualcomm. I'm not saying these are bad businesses, but being a good investor is all about making educated guesses about what will happen in the future. And when operating margin is all over the place, that becomes a lot harder. Let's summarize. Operating profit tells you how profitable the business is. To calculate operating profit, subtract operating expenses from gross profit. I look for businesses that grow their operating profit over time. From operating profit, we can calculate operating margin. To calculate operating margin, we simply divide operating profit by revenue. The higher the operating margin, the better. When I choose companies to invest in, I look for consistent operating margins. For more videos on investing, follow Value Theory or go to valueinvestoracademy.com.